Good evening. Welcome to Options Tender. It's Sunday, November 26th. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. We're going to go through SPY on multiple time frames, starting with the monthly. But first, we're going to check out just what's happening, what's coming up this week. We had that short week last week with some economic data. Markets typically are bullish during those short weeks. You got to be careful that they don't pull the rug from underneath you, but for the most part, with the light volume, the market floats up, and that's what it did this time. So we're going to look at the economic data that's coming up. Lots of good things this week that could be potential catalysts. I'm not going to talk about the individual items themselves. I don't usually go through there. I'm not worried about the actual numbers. I do peek at them to see, what might be happening. But I don't want to emphasize that because the market can take each individual item differently and completely fool you on what you think should happen on the market. So that's why I don't directly look at those or put them on this channel. So next, I had a question on the YouTube channel about what I think fundamentally will drive this market not to hit all-time highs. And the biggest thing that I want to talk about is the yield curve. So we'll go through that, and then we'll head over to SPY. All right. So if you're new here, like I said, go down to that bottom right-hand corner, hit that Options Center logo, and don't forget to like the video. The best thing that you can do for this video. Thank you. We hit 500 people. I see a lot more likes happening on there. It makes me want to do more videos more often so we can really put a story together on where the market may be heading, and so we can trade that and make some money. Okay, so we have the economic calendar for next week. Each day we have some sort of catalyst happening. New home sales on Monday. We have consumer confidence on Tuesday. They have these red stars here. If you want this, just go ahead and put this in your browser. This is what I use. Thinkorswim also has a calendar as well. Every once in a while I use that. And then the GDP is a big one on Wednesday. So we'll really be keeping our eye on that one. That's before the bell. So look through these. There's a few more. OPEC, jobless claims as usual every single week. But everybody has their eye on PMI and such. And the ISM will be a big deal with the PCE because of inflation. That's really what the market is looking for. Okay, that's all with that. Now, what I want to kind of give you a visual of is the yield curve here. Now, if you see the yields up top here on the left, excuse me, I said on top, on the left here are the yield percentages, and then on the bottom are the bond yield years. So you have the 2-year yield here, bond yield, 3-year, 5-year, 10-year, and that's really all we're going to pay attention to here is the 2-year and the 10-year. So that's the most watched item. So what we have here is the earlier date yields. The 2-year bond yield is giving us a 4.9% interest rate. Okay. And what's so important is the 10-year for a much longer duration is giving us much lower underneath this 4.5. So would you, if you were holding something would you rather have a much higher yield and hold it for 2 years for it to mature? Or would you rather get a much longer date and with a lower yield? So that in itself, this means it's inverted. That's very unusual. Now, in a typical yield curve, the later dated items, the bonds, would have a higher yield. They'd pay out a higher yield because you're holding them for a longer amount of time. This is abnormal. So the 2-year would be down, just for example, 4.5, and the 10-year should be up here near the 5%. That is a yield curve that is normal in a healthy market. Now, the curve is inverted. And the problem is as soon as this becomes uninverted, that's when we're starting to look for a recession. That's what happens right before a recession. This gives us the signal that we're going to head into a recession. And then when it uninverts, that's when it hits. Okay, so that's what we're looking for. That's just a very simplified way of saying it. And we've been inverted for quite some time. If I'm not mistaken, for the longest time in history, we've been inverted. So I'm looking for this to uninvert really, really soon here. And there's a couple other fundamental items. I did answer the question on there if you go on YouTube, but in the comments. But that's the one thing that I want to show soon. And this can happen in a couple different ways. The 10-year yield, if that goes up while the 2-year goes down, that's one way. Maybe the 2-year tanks and the 10-year stays the same, or just moves down at a slower rate. That's there's different ways that this could happen. So I just wanted to point out that's one of the biggest fundamental things that I'm looking at on why I don't think we make all-time highs. I think all-time highs is going to be very difficult for the market to reach in these conditions, about to uninvert. We will keep our eye on economic data. Like I said, I'm not going to, the market will tell you what it wants to do when the data comes out. So that's the important part. But when the market starts to, the economy starts to deteriorate and the Fed starts to pivot, that all has to do with this yield curve. All right. And I talked about in earlier videos when we look at the TNX, that's the 10-year yield, that, it's right now it's an inverse correlation with the market. So there's going to be a time when TNX, the yield, 10-year yield, goes down and the market goes down with it. Right now, when the TNX goes down, the market goes up. It's good news for the market. There's going to be a time when when they correlate again, the 10-year is going to tank and the market is going to tank. That's when you know that changes are happening in this yield curve. All right, enough on that. Let's go through our regular analysis and jump into it here. So we have SPY on the monthly time frame. Hope that all made sense to you. We have our monthly time frame here. We're just kind of consolidating, springing. We're getting tight here in a triangle. We're at the trend line, downtrend line here. I know I'm not exactly on there. I just kind of drew it on there, but we're right at the downtrend line. I do think at minimum we get a pullback if we do want to go higher than this point here. At minimum, we're going to get a pullback. So we are looking for lower prices below. But just on a basic standpoint, we had this ascending triangle. We broke out from it. Broke out from the triangle. And all we're doing is back testing. So yes, we are in a bullish stance. I mean, that's a big candle, a big monthly candle. We'll see how it ends. I wanted to show the monthly because we don't have many days left here in the month. So let's see how that ends. But we had a breakout, back test, and surely we can go much, much higher. I don't think that's the case, but we're traders. If we start to make a higher low, we hold that 8 EMA and start using that as support and break out from this downtrend line. We're gonna get bullish on that. We're gonna at least put our backs against that. It's gonna open up new all-time highs. Doesn't mean it's gonna make it, but we have to trade a little bit different if we get above this downtrend line. All right, let's go check out, how about just one of the indicators? Okay, so we're kind of in a neutral stance. We're in a slightly bullish stance here. Just a bullish bias. We're going sideways, but we're not making any red histogram bars here. So we did not make a bearish cross. Now, if we get this new high above this downtrend line, we have a potential bearish bearish divergence. We already have that on the Qs. Now, the slow stoch is heading towards the downside. This could cycle all the way down. It could make a higher low where we make a divergence from this high here. So we'll be looking out. If we do get above this high, we'll be looking out for any negative divergences, which again could play out and head lower. It can mean some sort of fake break and heading lower. All right, we do have counts for that. We talked about them on the last couple of videos, so check that out. And then we mentioned throughout the last couple of weeks what our all-time high bullish scenario is. So that is out there. It's a expanding ending diagonal. So I'll pin all these videos up top throughout this, and then at the end of the video as well. All right, let's check out the weekly time frame. And we do these videos often, so please feel free to hit that notification bell and get these video notifications. All right, so we're trying to make a bullish crossover here on the MACD on the weekly time frame. Again, we make new highs here. We're likely to get a negative divergence on the weekly time frame, and same with the RSI. We're already into overbought area conditions, so we do look for a pullback. Again, if this does make a higher low, then great, then price goes higher, but we're looking to the downside. I think this move is almost finished or finished. Let's pull up the weekly. And again, overbought conditions on the slow stoch. So that's starting to curl over. We won't have a sell signal until we cross over the 80. So we don't have confirmation on that yet. We have the conditions for a reversal, but not quite. Obviously, on the candles, you can see we don't have any confirmation. There's no reversal on the candles, and we just look real mature on all the cycles for the MACD, RSI, and the slow stoch. And in the past, what we're showing here is some pivots. I have these in dotted lines because I want to emphasize that they're pivots. They're not trend lines. They only have 2 points on them. And so we'll be looking at these to see if they provide any support there. But our main support is that ascending triangle between these two horizontal lines here. That's where we made our support there. Blasted off, skyrocketed. Now let's see what kind of pullback we get. Do we make a higher low and hold any of these pivots? We certainly will not trade into the pivot. We will put on protection as we get into certain areas that we'll talk about in the lower time frame. Let's go to the daily time frame. Daily trend is our friend, and we're going to check out a couple of indicators. I'll pause the video as I go through them so I can switch boards and you don't have to wait for a couple things. But right here is the optical of a ascending or rising bearish wedge. So this is an optical traditional technical analysis that we possibly can make a new high here if we hold a higher low and we fill out the wedge, but not make new all-time highs. This could possibly make a double top, not make new all-time highs, and then start falling from there. We do have a count for that. The other visual is behind it. It's the channel here, the blue channel. We're making a high at the blue channel, not a new intermediate high, but a new lower high from here. So technically this is still lower high and we can move lower. This is a bearish structure. Okay, so we can go down from here. Looking at, let's do our regular setup here. Okay, so on the MACD, we're starting to curl over. We still are in bullish conditions, so we will have to watch that. Maybe we backtest the zero line and then we make a higher low and start heading up. That's what we'll have to look for if we do get that. We're going to get a bounce no matter what, but that's what we'll look for, is to see if we just continue to cross down. We do have a bearish divergence, a negative divergence in RSI. We have negative divergence on the slow stoch. So we're looking for, either way, we're looking for that reversal. Let's see what it does. Let's see if we go get a deep reversal. My guess is that we go all the way to test the bottom of this trend line, getting the bears all in and scaring some of the bulls out after this huge move. A big reversal test here. We're going to bounce either way, and this is just a projection. It doesn't have to go this way. We get a bounce, and then we head lower. That's my scenario, but if that bounce continues, and we break this channel, then, again, we go higher, and I have a count for that. So let's go ahead and we will, just give me 1 second here. Okay, so I just wanted to pull up a different set of boards here that we have. So we have a naked chart here. Clearly there's where the divergences are marked, and you'll see on different indicators what's happening. So we have this Keltner channel, just massive move above it. We're in dire need of a correction at minimum to this 438 area, which is the 20 moving average. I do think we go lower, but we'll see what this Keltner channel does. It didn't hold price action, just a massive, almost 3 sigma move above it. So there's not much other than it's calling for a correction. There's not much this can tell us besides that we're just a massive move. So we have the Ichimoku cloud. We thought the cloud was going to hold this move. Yes, we thought we stopped here. We got a reversal, but the cloud held and price took off and gapped with the CPI gap here. Now, I do think that we do retest the cloud. We could possibly come to the bottom of the cloud. There's all sorts of spots where price could hold or at least give us a bounce. So we'll be seeing if the cloud holds anything. It is giving us some bullish signals here. Let's see what happens. What happens with the cloud is if you see these bear market rallies, you get a big rally, gives us a bullish signal, and then just fades under. The cloud does not hold it, and price accelerates, and the cloud turns back to the red. Now, big massive move, cloud turns the yellow, the bullish, and then couldn't hold. Got a bounce off it, couldn't hold, and starts breaking down again. So we'll see if that happens. Test the cloud, get a bounce, head lower. On the DMARC, we're getting a 9 count exhaustion on the SPY, and we're also on the Qs, NDX, or at least the NASDAQ futures. But we have our 9 count. We have an inside day, possible reversal. We need to get underneath this reversal candle for confirmation. We haven't gotten that confirmation yet, but that's what we'll be looking for. So that's what the McClellan oscillator, negative divergence. We started with a negative divergence here, got one again, and again, triple divergence here. I do think this cycles back down. How low it goes, I don't know if we'll make a positive divergence again, but this cycled all the way through from the October lows. You saw each low made a divergence positively, and then we just ripped to the upside into overbought conditions, well overbought conditions, and now possible reversal coming up. Money flow index. Money flow index finally got a negative divergence here at the new high with that indecision candle. So you see price action doesn't really touch those overbought territory conditions very often. And when it does, you get a pullback each time. Some are shallow before heading higher, obviously in that massive move up there. And then some divergences get real deep, and that's when you have a large reversal. After a cycle through from oversold, you can have an overbought condition, real V shape there, reversal. So that's a little bit more of what I'm looking for. but anything can happen. We can make it a higher low in this not cycle lower yet. So if we make a higher low here, then we'll be looking for a lower high with some divergence if price starts to get a little bit higher. So we'll be watching out for that. Last but not least, on these indicators, the balance of power. It's just there's signs everywhere saying we're going to get a reversal. The balance of power doesn't get a divergence very often, but when it does, it plays out well. So just played out in October. We're looking for a reversal now. So circling back to the other board that we're on, you can see price action is getting tighter and tighter, triangulating with this bottom turquoise line and this top blue line. And I do presume price will get a little bit tighter before breaking up or breaking down. Okay, so I do think this is going to get tighter just a little bit more. Some people call this a triangle, wave 4 triangle, and go to all-time highs. I just don't see it like that. I think we'll go down, get a bounce, and then the bounce breakdown before heading lower. Now, I'm going to quickly go through this. I'm not going to go through in depth, but here is our count for the top. This is my primary scenario. We have our top in, we reverse, we head lower for wave 3. That's my primary, that this is an A or a 1, a B for 2, and then we're setting up a 1, 2, heading for 3, going much lower. Now, you can look at more depth in previous videos if you want to. This is my secondary. That's the all-time highs. Let me do the secondary, then I'll go to this ending diagonal scenario to where we have our A, B, and we just fill out that triangle, the ascending triangle or a rising bearish wedge, where we have our 1 top here, and that we get our 2 pullback, deep pullback, wave 3, possibly a little bit shorter than wave 1, but can't be the shortest. 4, 5, not making new all-time highs, just a nice little ending diagonal that drags out in time and rises in price and gives us a top there, but nearly probably a double top towards the all-time highs and then heads lower. Now, if we break these near-term highs, then I'll focus a little bit more on this last scenario. This last scenario says we make all-time highs, but I think that will be, once again, a top. So with this expanding ending diagonal, we have a wave 3 here rather than wave 5, a wave 4, and now we have, look, each wave is 3, waves of 3, but they have to expand on each set of waves. So you have ABC for 1, ABC for 2, a larger 3, larger 4 than 2, and then 5 should be larger than wave 3. So we have to get above all-time highs, not only all-time highs, but we'll have to make it above this 100% move from this wave 3. We'll have to get above there, which says we'll probably go to, we'll have some projections, but probably around, 490, 500, things like that. But we will focus a lot more on this if we make a new near-term high. That will open the door to that. But right now, this high is good. This high is good. We're making a lower high on all those. So this price action is going to have to prove to us that we're going to make a new high. And then we'll put this in perspective. All right, so that's what I wanted to put on there. Let's go to the 65 and kind of end this video a little bit. Maybe we're getting on about 24 minutes, so I don't want to drag on. You see the bottom turquoise and the top turquoise line. We're kind of triangulating into it. We have our profit taking area around the 430. That's going to be important because we're gonna really press our trade into 430, take off some profit, and start adding protection if we start to get lower. So that will be our protection area. This will be our profit taking area. Want to make sure I showed you that. And while we're talking about a VIX, we'll be watching VIX during all of this price action. this is the more of the bullish scenario for the market. VIX made a wedge. We broke down from that wedge. We made new lows here, and we're basically making new lows. If we bounce back on the correction with the market, VIX is going to bounce, back test that wedge, and it'd be really bullish for the market for the VIX to make new lows. Now that's the bullish for the market optical, but the bears, what the bears are looking at is this wedge. I know that the VIX is extremely volatile. I'll go on the daily time frame. Extremely volatile. We can move this around however you need to move it. It doesn't matter. It's back testing this wedge, and it moves much higher. That this wedge was just a single move here. Probably if you look, it's not really a wave 4, but just a bounce before getting a lower high, or excuse me, a lower low and a lower high, and finishing our move from here. And some people are even going to draw it as a channel. So there's different ways you can look at it. You're drawing a channel from the bottom, but either way, and we think we're going to start breaking out from these. If we do not break out, let's say we back test, hit this channel and head lower, that's great for the market. We break above this channel and watch out. There's all sorts of things to watch. Like I said, the yield curve, there's all sorts of indicators that we'll watch, but breaking out from the VIX will be one of the things that we'll be keeping an eye at to see which way the market goes. And we'll keep you updated with all those types of moves. If if you watch these videos over and over, we put these videos together. They're in sequence to show you what I'm thinking, where I think the market goes. We have new information each and every day, so keep an eye and continue to watch these videos. We're just kind of moving along here. I do want to show Apple. Apple possibly could have a top here. A 1, 2, 3, 4, 5 leading diagonal into wave 2 pullback at the 786, could head much lower. But is there an alternate scenario? Yeah, absolutely. Apple could make a new all-time high. This could be just simply a wave 4, in that we're looking for an initial wave 1, pullback for wave 2. And if we start getting support in this 176 area, I should call it more the 180 area, because that's a zone. We start making higher lows here on Apple. Watch out the market. The market's probably going to do the same thing. Get a bounce, either head lower or just continue up higher for wave 3, 4, and 5. Could be an ending diagonal. We'll see. Well, it's hard to count what's going on here in Apple. That's just a straight line. So, all right. I hope all that helps. Don't forget to like the video. We're going to make another one. Possibly, we're going to be traveling tomorrow, so if I don't make one tomorrow, I'll make it in the morning on Tuesday morning. I'll try to make a video on Monday night from the information that we have. I do think we get a top on Monday if we haven't had a top already in most markets, and get turnaround Tuesday into lower prices. I don't think this is going to be a faint move. I think this move is going to be pulling bears in and taking bulls out, just to shift the sentiment, and then we'll see which direction it goes from there. All right. Thanks for watching us at Options Center. Have a wonderful night, and I hope everybody had a happy holiday.